Okay, hello guys, happy Sunday to everyone. So today we'll be doing our market forecasting. It's your boy Toxic. So let's get straight to our DXY. You know, we always do our market forecasting on Sunday, preparing for the week. So we'll be preparing on how the market will look like next week. So as you can see, guys, this is our DXY, our dollar index. Let me clear out all these things. Okay, so this is our dollar index, guys. As you can clearly see here, we had a fair value gap at this area. You see, when the market left, we had a fair value gap here. Let me quickly draw the fair value gap. Okay, so I would like to explain why the market actually came back down to the downside. So this is the weekly time frame. When the market left this area, you could see the buy. The market actually bought all the way up there, take out that fair value gap, and you can see this very big bullish candlestick, bearish candlestick, sorry. You can see this big bearish candlestick that engulf four bullish candlesticks at once, or is it three? Yeah, three bullish candlesticks at once. So guys, that market was actually coming all the way down there to take out what we call liquidity. If you look at that level, you can see a 4 hours demand zone or a 4 hours order block. I actually put it as a 4 hours demand zone because when you go down to the smaller time frame, you will see your demand at that area. So now, what are we supposed to be anticipating in the market? We had a draw on liquidity down here at this area. So if you look at this area where I put this box, it's a demand zone where the market came back, took out the liquidity that is situated here, and boom, pushed to the upside. So now we have this area here as a draw on liquidity, which is also our key level, which will label it key levels. This is a key level here. Key level. Okay. So now we have seen our key level. We'll be waiting to see what the market will react at that area. So now you can see the overall trend of this market is an uptrend. According to our overall trend, we had an uptrend. You can see DXY have been uptrending. As you can see, the trend traders will look at it like an uptrend, but then we don't trade. I'm not the trend line trader, so this is just to show you guys the overall trend of the market. What we are more concentrated or what we are interested in is just this price zone at this area. So if you anticipate it well, you see you had the break of structure here, gave us a break of structure to the upside, and so the market came back down to collect liquidity situated in the downside. The market has been ranging all this area around the market. So the whole of this zone has been ranging, and you can see when the market range, it forms liquidity. So let's go down to our daily time frame to see what the market is telling us. So this is our daily time frame, guys. This is our daily time frame. As you can see, what happened when the market came all the way to the zone? Immediately the market came to that our 4 hours demand zone. You can look very well. You see, we had a tap in. We had a tap in, closing with the candle tapped in, as you can see here, giving us some rejections, and you can see the next candle was bullish, telling you that buyers were in control of the market. So now we have taken out the liquidity to the downside, and now the market is buying. So now where will I be looking at possibilities of liquidity? I'll look at this candlestick here because it was an imbalanced candlestick caused by the news when the market opened. Was it this week? Or yeah, this week, because you have Monday, Tuesday, Wednesday, Thursday, Friday. Monday, Tuesday, Wednesday, Thursday, Friday, Saturday. Yeah. So that was I think it was last week when we had this news that affected the market. So now guys, you can see we had that level. So now I'll put this now as an internal range liquidity. You get, so this now is an internal range ENL. I'll just label it like that. NL, which is also known as an internal range, or ERL, sorry, ERL. Let us have it, ERL, internal range liquidity. And you can see, so what can you observe from the market now? At this area here, we have at this level, we can see we have a lot of imbalances at this level, but then we are not like actually interested at that level for now, because we want to first of all look at what price is going to do, or how price will react in our key levels. We want to see what price will do when it comes to our key levels. So here our 4-hour demand zone, which was previous key level, was respected, and you can see price respected and bought to the upside. So now let's go to 4 hours. Okay, so this is our 4 hours now. You can see this was our demand zone that price came, tapped in, and gave us that push to the upside, giving us this 2 is to 3 reached to reward, 2 is to 37 reached to reward. So this was where we were planning to take our first take profit, and you can see price is almost closer to it. So now I'm still holding my trades because I took the trades all the way down there. Still holding my trades. I am holding my trades all the way up to the key level up there. You get, I'm trying to hold my trade all the way up there, but for now I'm focused on this a price action that is forming here. So from our 4 hours, from our higher time frame, we have seen a buy. Now what we are expecting, we are looking at, if the market open, are there any possible reversals before we continue taking our buys? So the answer now is what we are trying to figure out. So now when you look at this area of the market, for me, we had this break of structure here. So what I'll be expecting is, I'll kind of be expecting price to maybe come down here, because it was the last candlestick that formed, and we always say a valid order block, it's the last candlestick that formed to give us a break of structure after a consolidation phase. So this was a consolidation phase here. We had this pullback candle, and we had this candle that gave us this break of structure before giving us this pullback candle, before you can actually see the market pushing up to the upside. So I'll technically try to mark this zone as my key level, but when I mark as my key level, I'll be trying to expect to watch at price. I need to keep my eyes on price to see what price we do, because we are not the one controlling the market. We are not the one controlling the market. So the market can still come down all the way there, and the market can still not come down. So we need to be watchful to see what price action is telling us. But of course, I've already taken my partials of this trade. So the one I'm risking, even if it goes against me, I've already collected my partials already. So let's watch out. This is our 1 hour time frame. Okay, in this our 1 hour time frame now, you can now see more refinements in your trade. You can see when the market came all the way here. You can see when the market left this zone, that we had this kickoff from here. We had this buy to this upside. Yeah, we had this buy to this upside. The market did a little pullback, gave us this break of structure here. I can see this is actually a pullback, collecting liquidity from that area to push all the way up here. So now what I am actually trying to look at now is, now I can do more refinements. I can do more refinements in my trade, because I can now see this level here, and I can decide to start looking at that level as my key level. Yeah, I can start looking at that level to be my key level. Why am I looking at that level to be a major key level for me? Because if you look technically, after we had this break of structure at this level, let's take this level as our break of structure. After we had that break of structure at that level, you technically notice that this candlestick spiked all the way to this low. This candlestick spiked all the way here, collecting liquidity in the downside. So you can see it spiked down and goes up. So I am already looking this candlestick like it came and did a liquidity sweep already. So I'm looking like all the liquidity down here have been swept. So I'll be looking at this level. And then when you also come here, you see another liquidity sweep at this area here. But then if you go to the smaller time frame, there will be an open price balance, because go lower to maybe our 15 minute, I'll be looking at open price balances at that area, yeah. So you can see this our smaller time frame. You see, after price took out this liquidity, you can see here, after price took out this liquidity here, the candle came back, filled in the imbalance in the market. So I'm looking at this area now like a major imbalance. And then so many people like the support and resistance traders will look at this level now like a resistance zone for them to execute that trade. So many people will be looking at the market to come down all the way to this level, here. Let me mark it out. Some people will be expecting to take their buys from this level here, you get. But me, I'll be expecting to take my buys all the way in this key level. So the only thing is you just need to be watchful, look at how the price will react, and then you know what to do. You see, because it was actually a AMD trade. It was actually an AMD. You can see here we had an accumulation phase. We had an accumulation. We had accumulation, and here we had our manipulation. Our manipulation. We had our accumulation, manipulation. We had our accumulation, manipulation, and this area now becomes our distribution. Yeah. So this area now becomes our major area now. This is now our distribution. So this area now becomes our distribution. So you see, we had a clear AMD that formed in our dollar index. We had our accumulation, manipulation, distribution. So guys, what do I now be anticipating? If we are looking at more buys, we are looking at our DXY to buy more further. So when coming now to our EU and our GU, we'll be expecting the opposite to occur, because they are opposite markets. You can see we have the same thing: accumulation, manipulation, distribution, even in our EU, and same thing in GU. So in EU, I'll just put the A. You have the A here, that stands for accumulation. You have the M here, that stands for manipulation, and you have the D. Of course, we have the D here. We have the D, that stands for distribution. So you see AMD: accumulation, manipulation, distribution. So without wasting more time, we go straight to our time frame. So this is our 1 week time frame. What can you observe? Your overall trend, guys. Let's see monthly time frame. So we see our overall trend. So this is our monthly time frame. Our overall trend, you can see continue BOS breakout structures to the downside. See, you have continued breakout structures. Here again, another breakout structure to the downside, telling us the market keeps going down. So basically, you can see we are on a downtrend. We are on a downtrend here. And what do you observe? Each time the market comes down, look here. When the market comes down, it comes back, take out liquidity to the upside, give you new lows, comes back, collect liquidity, give you new lows. So the market is actually coming back to take liquidity, guys. So you can actually look here, the market came back to take liquidity and give us new lows. So That's just what you can observe from the trend. You see, that's how the trend is actually spreading. That's how the trend is forming. So now what we will be looking at? Here we are looking at this our key level we get. So in the 1 month time frame, you can observe the candlesticks take out liquidity close within the range, not with the yet. So you can see this here. There was liquidity. You can see the market bought all the way up there, took out the liquidity at that area, and came back down. So now where is your next draw on liquidity? Your next draw on liquidity now comes all the way to this key level here. That now you need to put an eye to get key levels. Key levels are very important. The key levels are very important in the forex market. So that's our key level there. We'll have that area as our key level. And of course, we still have another key level to the downside, but then that depends on how the market will play out in this first key level. So we'll first focus with the first key level that we are seeing. Go now to our daily time frame, our 1 day time frame. So this is our 1 day time frame. What can you really observe in your 1 day? You can see the market came back, took out liquidity, closed with a rejection, and the next candlestick, boom, to the downside. So now we are looking more of sell opportunities in the market. We want to sell, looking more of selling than buying. You can see that's it. We are looking more of selling than buying. You have your AMD, your accumulation, manipulation, distribution. So what are we looking at? We are looking at sales opportunity. If you come to your 4 hours time frame, you clearly see it's a break of structure here that we can also call a market structure shift or a change in the state of delivery. You can see at this level here, you can put a market structure shift or kind of a change in the state of delivery, and you can see where your this where our key level is all the way down here. And when you look at this area, let us see our fair value gap, was it the tapped? Because we had a fair value gap here, but yeah, the fair value gap was actually kind of tapped. Yeah, we had to tap in before going back to the upside. So but then we are respecting what our higher time frame is telling us. So I'm actually seeing kind of my key zone all the way down here. So for now, we're looking at how we can take our entries in the market when the week's open. So we are looking for sell opportunity, guys. Remember, sell opportunity. So then what will I be looking at now? I would basically in my strategy, I'll technically be looking at the price to react from this zone before I would actually anticipate to take a sell from this area. Yeah, you can see this candlestick came back. Yeah, you can see this candlestick came back all the way. It came up here before coming back down. But me, when I look at this, I'll call it liquidity. In my smaller time frame, I would look like that's an internal range liquidity. If you go to the 15 minute, you might see something like a fair value gap or so, bro. But then I'll just put this as my key level, just to make sure. But you always need to keep your eyes on what the market is telling you. Always keep your eyes on the price of the market, because you won't want to enter the market. You won't want to enter the market early and let the market stop you out. And also, I bet you there'll be a lot of guys, like a lot of traders, there'll be a lot of traders that we take their sales from this area here. Let me show. We go to our smaller time frame first. This is our 15 minute. Okay. So in this 15 minute now, if you look keenly, this was where I said I'll be looking to take out my sell. I want to see what price will do at this key level here for me. I want to see what price will do. But then some traders will look like the market has already taken out that zone. So some traders might be looking at the price action from this area to see what price will come to take out this area. Some traders might, not all, get. But if you go to like your 5 minute time frame, you will see more stuffs. Yeah, you can see your 5 minute time frame now, that level acts now like a supply zone. Shey get. You can see very well it acts like a supply zone. You can see the last candle, boom. But now we never have no break of structure. We just have the ASEAN manipulation before the market close. So now you can see that all those manipulation. So after this manipulation, we'll be expecting for the market to oh sorry, after this accumulation, we'll be expecting the market to manipulate a little bit, inducing some traders to buy and inducing some traders to actually sell. But me, I'm patiently waiting my market up there. So for me, I'm patiently waiting my market at this key level up here. I don't know. I don't want to take a rush. So I'll be waiting my market all the way up here to actually see what the market will tell me when it comes to this area. So if I'm looking for a sell, I'll be looking at this to be my entry, targeting this low, of course that low, and my stop loss should be above this high here. No, above this high here. So this is how my trade is gonna be, bro. That's what I'll be looking at. But first I need to see what the market will tell me when it comes to my key levels. So let's go to GEO. GEO is practically the same thing. GEO is practically the same thing. You won't see no difference. You still see practically the same move, it's EU. So GEO technically is still the same thing. And in GEO, you can see this my Fibonacci. I had already done my analysis. I just had to do a video to post. So if you can look technically, you see with my Fibonacci retracement, the price is actually reacting at our premium level. Get this is our premium level, our 78.60%. It's our premium level. So now that the price is reacting in that premium level, we are expecting now to see our price action on what price is going to do. And I can I can technically see, let me delete this, and I can technically see price is already rejecting. You see, price is already rejecting, giving us a push to the downside. Price has collected liquidity, giving us this CRT move here. You can take all this level here. See, that's our tether soup up there. So price is already rejecting at that area, telling us, okay, now I want to go down. I want to continue going. I want to start going down. So we are looking for our sell opportunity, bro. We are looking for sell, and this is gonna be our drawn liquidity. So we'll be looking at this area here. So we'll be looking at this area here as our key level, draw on liquidity to the downside. It's always good you mark out your key levels to see what the market do when it reaches at that key level. You don't want to lose your money. You don't want to lose your money, even if the market needs to come to this second or third key levels. But firstly, let the first key level be respected, and you see the market closing actually with a closure, telling you about going more to the downside. So guys, you can see here, we have our market pushing to the downside, collecting liquidity up. You can see our market pushing to the downside. So go to our 1 hour, go to our, you see almost the same thing as I told you. So me now, I'll be looking this area now to be now my next key level that I want to see what price will do when price come here. I want to see my price reaction at this level. So this will be my POI, my point of interest. This will be my POI. I want to see what price will come and reach here and tell me. But then I'm still keeping my eyes on the price, bro. You're not the one in charge of the market. You just need to see what you want to see. Price can still not reach at that level and decide to sell to the side. But then you just want to be conscious and look at what the market is actually telling you. So that's just it, guys. So without me wasting your time, without me wasting much of your time, so we have our sell, and of course our market to look kind of something like this. Yeah, our market should look kind of something like this. Stop loss above this high here. Yeah, so our market to kind of look something like that. So we're expecting price to go up, take out that level, push to the downside. So that's just it, guys. So now what we'll be looking at in, let me see, I hardly trade USD. This is your USD JPY market. I hardly trade, but let's see what USD JPY is telling us now. So USD JPY, hardly you can see, if we go to our weekly frame, you can actually see it has been downtrending. It has been downtrending. Technically, it's an uptrend. Look at it, the market very well. It's an uptrend. But why would I say it has been downtrending? Because when I look at the trend here, it's bullish, real bullish. You see. But when I say the market has been downtrending, I mean the whole of this phase here. The whole of this phase here has been going to the downside. So what we are interested is, we don't trade against the trend. It hasn't broken. It hasn't violated any. The market has the trend hasn't violated any low yet. So we are still looking at buy opportunities, because the market haven't violated any lows or any highs, and you can see the market is still much pushing to the upside. So you get, the market is still pushing, going bullish. So what are we to look at? This was our key level. We have now this area here. We have now this area. We mark it out. After marking it out, to the daily time frame. So now in your daily time frame, you can obviously see, guys, you have your uptrend. You can obviously see your market going bullish. You obviously see your market going bullish. You haven't taken out any low, but instead what happened? It came back all the way down here and respected this zone, which is your demand. Came down, respected your demand, did the soup to the downside, collect liquidity, and you have your push now to the upside. So what will you be looking at? We go to our 4 hours. You can see. So now we are approaching already our key level where we are supposed to take our take profit. We are already approaching. You can see this break of structure here. You can see this break of structure here, as you can see. And now you'll be looking at this area. I'll be looking at now this area for possible pullbacks. This area here, because this was the last invert candle that occurred. So the whole of this area, I'm gonna keep my eyes on price here. So this place now will be like my POI here. This is gonna be my POI, point of interest, where I'll be putting my eyes on to actually see what price is going to do. So if I technically to maybe 1 hour frame, yeah. So this is it. We had this break of structure, at our break of structure here, at our break of structure here. This area, the whole of this area, I would basically mark me. I don't know for you guys, but me, I'll basically mark the whole of this zone here. For me, I'll basically mark the whole of that zone as liquidity. For me, everybody has their strategy forex market. So I'll basically mark the whole of this zone for me as liquidity. Because you see, the candle was just going sideways, sideways, sideways before we had that push to the upside, giving us that fair value gap that you can see down, giving us the fair value gap. And so I'll just be patient. I'll just be patient to see what the market will do. So I have two areas that I can be looking at possible entries. I have this area here, and I have this initial POI down here. Because if you look at this area down here, It's actually kind of retest, but then I just want to be at the safe side. When you look at this candlestick here, it's actually kind of retest, but I'm not taking chances. We are dealing with money, so I'll be expecting to see either this. I'll be expecting to see either this or this or this. I don't want to take chances, bro. I just need to keep my eyes on the price and see how the market will react. So without taking much time, guys, it's your boy Toxic. It's your boy Toxic. I basically trade just EU, GU. I hardly trade gold, BTC. I hardly trade them because those are trades that they are very volatile. I can only trade gold or BTC when I see good setups. Yeah, if I can see good setups, I trade them. And if I don't see good setups, I don't trade them. Like you can see, this is a good setup in BTC that I have analyzed. I can say good setup in BTC, but then let's watch how the market will play out, guys. Let's see how the market plays out. But it's a good setup. So happy weekend, everyone. See you guys. Cheers, and see you in the next video. Please like and subscribe. And if you want to be part of my bootcamp community, please, guys, use my recommended broker Xness. Inbox me. I'll tag my number. Can inbox me. Use my recommended broker Xness and join my bootcamp community where we learn, share signals, have classes, and work together. Your idea is my idea. We are both learning. I'm not yet a professional trader, but I'm open to learn from anyone. Really open to learn.